Hi, I'm Nick Farrow. I'm Modern Treasury's Head of Bank Partnerships. And our next panel today, we're going to talk about the pivotal role that our bank partners play in the Modern Treasury ecosystem. As Matt and Dimitri described in their opening statements, the banks, the infrastructure they provide, the access to the rails, their support of our mutual customers is absolutely critical to the success of that ecosystem. From the very beginning of the product, the founding of the company, it was our view that the most efficient and effective and reliable way for companies to move money for their customers was through their own bank accounts. And so our success is really built on the success of our banks. Our banks have to be successful for us and mutual customers to be successful as well. So I'm going to introduce the panel. We are very lucky to have three great partners with us today. And so from Bank of Montreal, we have Andrew Harrison, who is Head of Digital Partnerships and Innovation. We have Brody Mulderig from JP Morgan Chase, and Brody leads, he's Head of Web3 Business Development, also digital gaming, and an unannounced, but he'll talk about it in the panel, initiative that they're working on to get closer and build better relationships with product builders and developers. And last, we have Keith Vander Leest from Cross River, and he is the Head of Payments there as well. So please welcome them to the stage. Big thank you to all of you for joining, especially Andrew and Keith, who have come in a long way. Yeah. Andrew, let's start with you. As a partnership lead at BMO, tell us a little bit about the importance of partnerships to BMO and to the business in general.
Yeah, I think it's important to remember, if you kind of go in the Wayback Machine, Treasury and payments have always been really important for financial institutions. If you think about it, they're a huge driver for things like ROE, for our efficiency, and frankly, they're much more scalable than our deposits and lending. So taking that into consideration, I think the second thing to remember is once in a while we'll hear this idea about how fintech partnerships help us fill product gaps. And frankly, as a kind of payments nerd, I would say it's not really a product gap. What they really help us solve is a lot of the distribution, right? So how do we bring our products to our customers at the right place and at the right time where they actually want to consume it? We always have access to all the rails and all the foreign currencies, but how do you actually deliver it?
What are some of like the driving forces, in the market? Like you've got lots of different segments of customers. You've got technology moving at light speed. Like how do you think about like what are the factors that have influenced the bank to move toward a partnership model?
I think one thing to remember is, frankly, a lot of the fintechs now are in a place where they're secure and safe and reliable. And so you can actually use them for payments infrastructure. I think if what we've learned over the past 12 months is that, really multiple bank partners are important, right? Like no one really cares who their bank is as long as it works. That's what we were saying backstage, right? Like if it doesn't work, then there's a problem. But no one really knows or cares that JP Morgan is $3 trillion in assets and BMO's 1 and SVB is less than 10. Like they just want to know it works.
Right. Yeah. When you think about like what is a successful partnership like? What are the ingredients that make a partnership successful for your bank?
I don't know about you guys, but I think we've seen it on the stage today, right? It's really about bringing these solutions to specific industry verticals, solving real customer problems, and helping people actually make progress to grow their company. And frankly, like I can be a little coy about it, right? Like all banks are trying to make money. And so when our customers are happy and our revenue is up, that's a win-win for everyone. So.
Yeah, I think a cultural fit is really important in a partnership. I think it's important to understand as a fintech what bank is going to be a good cultural fit, right? And there's three different banks represented on stage here, but we all bring different things to the table, and there's going to be situations that you might not be a good fit with Cross River, you're going to be a better fit with JPM, you're going to be a better fit with BMO, and vice versa, right? So no bank is going to be the end-all, be-all. So it's understanding as a fintech which bank is going to be the right for me, and to the point of resiliency, which multiple banks. It's very clear since March that you should have multiple banks.
I think that is a challenge, though, especially if you're early. The banks have this huge hurdle to clear to support somebody who's moving third-party money, which is pretty typical for a software company or a fintech company. And they need to be compensated, and if you're really early and you're really young, you have to keep that in mind when you go engage with a bank. They're not going to deck all these expensive people and resources, take reputation, regulatory, credit risk, and all these things if they're making $50,000 a year from you. So it is hard when you were early to go get a multi-bank relationship. You don't have a ton of time to do that either. Most of the success we've seen in the fintech space really is just compressing time to market versus feature and capability. And so you can spin your wheels for a really long time with banks. And so early on, I would probably caution against getting multi-bank relationships, maybe rely on a fintech instead. But as you scale, I hate, it pains me to say this, but we're all friends here, that you could possibly use a bank other than us. But it is kind of wise because you do need some form of redundancy in your infrastructure, because things do happen, things do go down, and if your platform has integrated us or any other bank as a mission critical piece of infrastructure, that goes down, you go down.
Maybe just to touch on that, Brody, in your space, Web3, crypto adjacent businesses, traditionally more difficult customers to bank for certainly large institutions. Maybe what are some of the things that our companies should be prepared for or think about approaching a bank when they're looking to move money for customers?
Well, you said traditionally it's hard. It's still very hard. So before I was doing Web3, I was a fintech banker for a decade, and this was before fintech was really a thing, and kind of caught the curve going up, and it was difficult for banks to support that space, right? You have 23-year-olds building payments companies and moving money all over the world. That makes bankers a little bit nervous. Web3 is kind of another next level of risk and regulatory ambiguity. So if you're in that space or you're thinking about interacting with it, FTX kind of changed everything in the current environment. So you need to go in when you're talking to your banks, understanding that they have all these obligations to their regulators, and the risk reward is a very, very difficult calculation to make in this environment until we get some form of regulation. The biggest problem I've seen, and I'm a believer in this stuff and where it's going, but as I've gone in and done diligence, my background was banking, so I've been trained to go in and ask all sorts of questions that are very deep and uncomfortable for many companies, is that there's a lot of regulatory arbitrage and grift going on in the space. And if a bank is not asking those questions, you might, whether you're fintech or Web3, if they're not really asking you questions, it's only a matter of time before you have a systemic problem, they may be exiting you. So you're going to want somebody who's thorough, who thinks about it, but you also want to just embrace regulation. Don't try to go for the regulatory arbitrage and try to get around it and whatnot. That, post-financial crisis, so long before FTX, the public rightly was furious at the lack of people being put, in at least in a courtroom over their behaviors in the financial system, and we don't want that to happen again. So now there's skin in the game, and so there's real penalties for the banks and even the individuals supporting these industries, and so they're going to be more conservative. And so I would say you need to embrace regulation and show your commitment to it, and do things by the book if you want support.
That's I would double click on that and emphasize that when potential partners come to us, they're focusing on the tech part of fintech, right? We need to educate them, and a lot of the time through the onboarding process is making them understand the importance of the financial services part of fintech, right? So specifically in a payments use case, BSA AML, so many times they underestimate the importance of BSA AML, right? And that's where our programs never get off the ground. They think like, oh, we can just go code to your APIs, do ACH, do RTP, do wires real quick and easy. And then we talk to them, well, what's your BSA AML program? What are your 5 pillars? And they're like, what do you mean 5 pillars? And it's like, okay.
And that one's jail time if you get that wrong for the banker, right? I mean, that is like, banks take credit losses. They don't like to, but it's part of the model. There is zero tolerance for sanctions violations or facilitating financial crime. So the stakes are very high there, and that's one of the most common themes that I've seen. Somebody comes in and says, oh, we're just a software company. You're going to move the money. Well, the bank's like, somebody's still responsible for moving this money. And so we get that a lot. I would say always, always, always get legal opinions from qualified outside legal counsel, so you're prepared, bring that to your bank, and the bank said, and the legal opinion would say, we think you're a money transmitter because of X, Y, and Z, or we don't think you're a money transmitter, or you're a broker dealer, or whatever. But have that buttoned up, because you will. It'll cost you like 50 grand. Nobody likes paying this, but what's your time worth if you spend 6 months going back and forth on flow of funds with your bank?
Yeah. Yeah, the legal opinion, the comfort letters, it's an important part to invest in and get a reputable firm to do that.
Keith, as a product owner, business leader, how do you think about balancing the need to develop new products, meet customer demand, but at the same time do that in a responsible way? So you're balancing speed and safety at the same time. How do you think about that?
So kind of two areas. One, we're in the business of moving money faster. We've been developed core competencies around ACH, then same-day ACH, one of the early sponsor banks for Visa Direct, MasterCard Send, so pushing OCTs out, push to debit. Then we launched RTP. We're one of the top 5 banks for RTP, along with JPM's up there. And we're going to be launching Fed now, right? But all of those are push out, right? So we're making it really fast to make money leave the bank. But as we've seen in March, you want to make sure that there's ways to move money in, so that there was conversation about wire drawdowns, right? We don't, our model's a little bit different than the Signatures or the Silvergates, in that we're not a typical bank of building up our balance sheet, but we do have to worry about money leaving the bank in a bank run, and we're making all of these faster payment rails to make the money leave, but RFP isn't a great solution right now. So I was talking to our product team about how do we move wire drawdowns up in the product roadmap so we get that in, because there is some demand for it, and that's a way to get money in faster. And then on the card side, AFTs, getting the money in faster. So that's one example. And then where we're trying to balance like the liquidity risk, right? The other area where we've got a lot of demand for cross-border payments from our fintech partners, and then we do support a lot of crypto, both high-risk verticals. So when we're going to be expanding our cross-border capabilities, we're going to expand that first with our non-crypto partners. Hopefully very quick thereafter, we can roll that out to our crypto partners. But 2 high-risk programs, we're not going to move them together and have our crypto partners immediately do cross-border.
I often find fintech companies and customers almost in some respect become partners in a way. Like they're collaborative, they're pushing the bank, demanding the bank to do certain things. How do you find that dynamic of working with some of your bigger customers?
Yeah, I mean, the customer demand is what drives our product roadmap. So it's really important to get a good partnership. Some partners, they kind of work in a vacuum, and then they come to us with an idea, and it's like, well, if you would have come to us a little bit earlier on, we could have, both with existing partners and new partners, if you come to us early on, we could have solutioned something that maybe isn't exactly what you had in mind, but it'll still achieve the same end goal, right? So it is very important for our partners to come to us, and they're doing that right now with FedNow, and they've done that with the cross-border payments as well.
I think I was just going to add, I think what we've seen too is some of our best partners started as customers, right? So starting to build that relationship, talking about culture, really a lot of partnerships really just look like the person being a customer to the bank at the end of the day, right? They're just using access to rails in some way. And so a lot of times I think as we think about a partnership ecosystem and we measure the success of our group, how many of our partners are also customers or started as customers? I think that's important.
So I lead the payments team, so I'm thinking about payments all the time, but we do have other businesses. And so what we typically do with our partners is say, come, and the payments programs are, although not easy, the easier to stand up relative to our lending programs, relative to our card issuing programs. So start small, and then through this partnership, we can add products, we can add services, we can stand up a banking as a service program, we can stand up a neobank program, we can stand up card issuing and lending programs. But those do take more work.
Brody, I'm interested to explore this new role or initiative that you're involved in. Maybe tell us a bit about how you're thinking about working with developers and becoming easier to work with as a bank generally.
Yeah, so this is something we're rolling out over time. And so banks have APIs, and many of you have worked with bank APIs and probably don't love them. And so there was a kind of an acknowledgement a decade ago that, hey, APIs need to exist so that you can connect into your ERP or treasury management system. And really who ended up buying them was developers, and it had to do with third-party money movement. But banks are not really set up, well, not really. I mean, they are absolutely not set up to cater to developers. They've never looked at developers as a customer. But when you spend enough time in the tech space, and that permeates e-commerce, fintech, we're seeing it increasingly in video games. That's tangential to some of the Web3 stuff I do, but also wanting to pay out developers across the world who develop on the platforms, as well as create in-game economies that mirror the real economy in terms of being able to buy and sell individual items for real monetary value instead of everything being confined to the ecosystem, to non-financial services companies, embedding payments and other things into their platform. We're seeing this sort of fintech infrastructure embedding itself into all these non-financial industries, and it's largely driven by software developers. And I admire a lot of these startups because they're hyper focused for the customer experience. I mean, they obsess about the user experience, and so they deliver whatever tool that they need to enhance that user experience. And banks have been very, very slow to do this. But we've increasingly recognized the importance of catering to the software developer, their importance in the financial system, in the operational leverage and scale and the beautiful experiences they build for their customers. Like, we want to embrace that, have them come build that. I think that we have certain core competencies as banks. Most banks feel they can just go it alone and build all the things, but the ones that have been spending enough time in the space realize they can't, and so they get partners. Or, in the case, the thesis I have is more, let's enable developers, because there's no way a bank is going to compete with vertical software. This is Brody's opinion, but I'm going to be right on this. Like, you cannot build a compelling front-end user experience for every industry and person out there. You have to compete against a team that is solely focused on restaurants or water utilities or what have you. You name the vertical within the economy. Or you can go out and buy these things, and as many of you may have found out, that you trade at much higher multiples than banks do. And there's this thing called the dilution that prevents banks from buying a really, really expensive company. The shareholders might revolt, and you just think of some of the top vertical SaaS companies. I don't say like Toast. Last I looked, their market cap was something like $12-15 billion. Now, do that 10 times over to cover every vertical. Like, that's a very, very expensive proposition to try to build and compete with that, or to try to buy those things. And so I think that the best approach is that you can enable them, but that allows you to deliver services as a bank that you've never delivered before. So you could have new streams of revenue. You can benefit from the diffusion of labor from developers in the community. So this is an effort that we want to stand up. We want to get it right, though. We don't want to launch this, but we are redeveloping our API portal and making it much more in line with what a developer would expect.
Does that create a natural tension in the different parts of the bank? For example, you talk about vertical software serving, say, construction companies, or you mentioned restaurants or others that might impact other parts of the bank. How does the bank sort of think about that?
Oh yeah, definitely. I mean, there's, like I said, it's kind of controversial, and this is why I have to say this is my opinion and not JP Morgan's opinion, because these things will cannibalize other product lines. There are other lines of business that could be impacted by enabling other firms to come and compete. I tend to take the view that this is inevitable. You can't fight the technological trend. The computing cycles that we go through are bigger than any one firm, and its wants or wishes to jump onto the wave, or you'll get steamrolled by it. And so that's where I think that vertical software is just a very, very compelling proposition for banks to support. Also, it helps mitigate risk, too, because one of the problems that you have, and you see this particularly in payment processing, is, hey, we want to sell credit card processing through your rails to all these companies. And so first they start selling to like retail stores and mom and pop stores, which are low risk, and then all of a sudden they're bringing adult entertainment, multi-level marketing, and airlines onto your platform, and it just magnifies the risk. It's very difficult to monitor that. So if you went in your vertical software and you're like, look, we're going to go master water utilities, the bank knows what risk it's taking because you're probably not going to onboard an airline if you're vertical SaaS for water utilities.
Andrew, how does that work in your vision for developing a partner network and an ecosystem of your own? Do you think about it from a segment perspective, or do you think more about it from a specific, payment type, or like a business function perspective?
Yeah, I wish we could say we didn't and that we thought about it more like that, but I think it's really hard, especially for a regional bank like ours that is very focused on, specific industries in which we operate. And so I would say there's always a healthy tension between those two things. One is we don't want to do anything for one industry and then leave another industry behind. One, the customers, obviously, that has a terrible image for our customers, but also for our own employees and bankers, right? So there's always that consistent, well, if you do something for these people, why not for these people? So I think that tension is always there, but it is much easier for an institution like ours to kind of start somewhere, right? So start in manufacturing or start in agriculture and pilot or test something. It tends to be the way things get traction.
Keith, I know you've been involved in some partnerships recently. How does Cross River think about that?
Yeah, I mean, kind of to go off of what Brody was commenting about our APIs. No offense to our engineering team, but you look at our APIs, they're pretty basic, right? It's ACH wires, it's RTP, and that's not super complex. But then talking about Modern Treasury, how they come in is they can create a more robust solution that can be more vertical based. We don't have, our vertical, if you will, is fintechs, and those fintechs can cover any vertical, right? We don't have we're not like the typical bank that has a vertical type business. It's fintechs, and then partners, layers on top of us, value added layers like a Modern Treasury help specific verticals, right? Not to speak about what Modern Treasury is, but from a B2B perspective, I think there's huge opportunity in streamlining payments, and I think that's where Modern Treasury can come on top of our bank core and add a lot of value.
I'm going to change gears a little bit. Andrew, a topic or an issue that's close to your heart is one of your other roles that you champion is diversity inclusion at Bank of Montreal. I'd be interested to hear about how you think that impacts, obviously, the bank employees, but also maybe the companies you attract and the companies that you support.
Yeah, thanks for asking. Love to talk about our Women FinTech program. Yep. So for those of you that don't know, BMO runs the largest Women FinTech accelerator in North America right now, which is obviously very near and dear to my heart. I think that my hot take on this, though, frankly, is we've really found a way to do it profitably, right? Sometimes it's hard to say out loud, but you can make money doing the right thing. And I think that's kind of the perfect mix that we found in Women in FinTech. We will never be, I shouldn't say this because somewhere the CEO is gonna send an email to me and say, we're gonna compete with JP Morgan, but we are not the size of JP Morgan right now. But by us focusing on women-founded FinTechs and how to serve them and incubate them, gives us just enough of the sliver of what's going on in the market to be really competitive and really get some great insights. And by serving that group of people, we make them customers, we make investments, we make money on those investments, we make money on them being our customers. And frankly, the employee and kind of benefits around being involved in a program like that are exponential, right? So all around, we kind of make money off doing the right thing, which, again, I could talk about it for too long, so I won't, but it's fun. It's really fun to do, and it feels like you're actually making a difference and you're changing the way people are thinking about FinTech.
Well, I think some of the things, too, this is where I go back to, banks can start selling products they've never sold before. They can monetize their platforms in different ways. My personal belief is that payments will gradually go to zero. It's going to take a long time because we still write paper checks, but these things will gradually go to zero. They're sort of a commodity, a protocol, a money protocol in a sense, but it's the data that surrounds the payment is really where all the value is, and that data can be used to create new things. So that could be insights into demographics, into ESG is a big thing, and we see that everywhere from when I was on the banking side, on the credit and capital market side of, hey, we want to have minority banks participate in our credit facility, instead of just having the big investment banks do it, to topics of like offsetting carbon, like putting APIs to, kind of do a mashup and tie that to your payment activity and immediately offset carbon. And, the bank could have a liquidity pool of carbon credits and then, fractionalize those and sell those. So there's new ways to monetize doing good that, that it's not just corporate speak. It's where you can actually create a sustainable incentive to participate in this type of activity.
Well, we're coming close to the end here. So I guess in summary, we learned a lot today about some of the challenges and the realities of working and moving money. Brody, I think you mentioned that there's a lot of ways in which the bank can improve and how it works with developers, companies, partners like ours. And Andrew, like there's a clear vision for working with companies like ours to help customers, mutual customers. So really appreciate the support. As I mentioned in my opening remarks, our success is predicated on making our banks successful and being supporting mutual customers. So we're very grateful for you all and all of the other banks that we work with. So thank you very much.
Thank you.